Uh-huh. Let's go ahead and move this over a bit, and we should be ready to rock and roll. Alrighty then. So my open trade right now, this is one from yesterday, is on the euro, and this is going to take a little bit of explaining, so I'll go through and here, let me pause my screen real quick. I need to shut down some apps here or else we're going to have some problems. Okay, now we can play back. There we go. I'll give a little bit more explanation, but right now you can see I'm short on the euro dollar. This is one that we were looking at in NuriFX yesterday. We were waiting for it to break down below the 110 level, which it did. It also had this nice little trend line that was forming right in through here. So when it broke through 110, it was also breaking through a trend line. You can see I talked a little bit about this strategy yesterday afternoon. As it was breaking through, it was going in negative territory. It was starting to breaking down more on the LP trend line, if you were using PitView for this. But I'm going to be totally honest with you folks. This is more of a fundamental trade for me. We have the ECB meeting coming tomorrow. And you can see on here on my trade how I'm short at 1.09962. I have my stop loss way up here at above this high, roughly 64 pips away at 1.10602. And one thing you'll notice on here is that I have no take profit on there. And you're probably wondering, well, Steve, are you absolutely insane? Usually we have to put in parameters and we like to put in a take profit level. Well, we have this pretty big event coming up tomorrow, the ECB meeting, the European Central Bank's interest rate announcement. It's a pretty big deal in the markets. A lot of expectations are kind of hovering out there as far as the euro and what they may do in the ECB meeting. My hope is, and this is why I'm calling this more of a fundamental trade, my hope is that, and I haven't captured my 64 pips back, so I have not captured a one-to-one risk reward. I'm up about 40 pips right now. I was up almost 50 pips at one point. My hope is that once I'm going to pretty much keep trailing my stop down every time it hits a one-to-one risk reward. So on this trade, every time we come down, every time it hits a one-to-one risk reward, pretty much every time it moves 64 pips, you could call it a 64 pip trailing stop, I'm going to be moving my stop down. So if I can capture 64 pips, I'm going to move my stop to break even. If it moves another 64 pips, I'll move it to lock in a 64 pip profit. And my expectation is, and I have some other trade opportunities. I just want to show you my open trade for right now. My expectation is to preferably hold this trade open through the European Central Bank announcement, and the actual the best case scenario for me would be before the European Central Bank announcement to have my stop at least locked in at a break-even point. I have some of my own. I'm one of those big followers of fundamentals, and sometimes I am a fundamental trader. And this is one of those trades to where I've been tracking Mario Draghi and the ECB forever, and tracking their movements, what they do, their monetary policy. And there's a lot of expectations built up into the rate announcement tomorrow of possible extensions to their asset purchases, them possibly going further negative on their interest rates. Now, these are expectations. This is what's expected. Most people would say, well, isn't that a buy the rumor, sell the news scenario? Yes and no. I'll chat about that more here in just a second. I'm going to go through a little bit on other market situations here right now, real quick, and then we'll kind of circle back around because there's some other trades that I am looking at putting on today. I just wanted to start off by showing you students that were in class yesterday. This is one of our trading scenarios from yesterday. So we are in this trade. and my plan is to try to hold it open throughout. I'm not doing a 3-bar reversal. I don't want to move my stop too spastically on this. I want to kind of ease into my stop a little bit. So we'll circle back around to this strategy here in a little bit. I want to kind of go through kind of the market scenarios first here. So here we are on March 9th. What's shaking out today? Well, global markets are up. We got Asia, Europe, U.S. futures are up pretty big actually. NASDAQ futures are up 17. Actually, Nikkei and the Hang Seng were down. So I guess global markets are more mixed than I thought. Here, let me do this real quick. Let me I had a Yahoo Mail account, to be honest with you. I get a bunch of spam in it. I think I opened it to get in on the Yahoo Finance. There we go. Yeah, you can see Dow futures are up 70, S&P futures are up 7.5, NASDAQ futures are up 16. Let's see here, crude oil up 1.5%. So oil's actually been going up pretty strong this week. That's one of the things I think that's been helping the markets kind of have more of a bullish tone to them. Is many people have been using the excuse for the markets this week as far as what's driving them. Well, over the last several months, it's been kind of a correlation. When oil's up, stocks generally are up. They usually use that as a pretty valid excuse as far as why stocks are up and down. So we see the futures are up pretty big. So we are looking at a risk on day, but don't let that fool you. Currencies have been kind of off on their own here as of late. Let's see here, and then you look at Europe. Europe's actually up pretty well. The DAX is up 1%, FTSE's up 0.5%, and then Asia down, but not down too much. You had the Shanghai Stock Exchange down 1%. Hang Seng's was down 0.08. Nikkei's down 0.84. So I guess I guess I was a little too quick on the trigger there. So Asia down. Europe and U.S. futures are up. Oil up. Commodities as a whole have been up. Gold's down just a little bit. We had talked about central bank season today. BOC's at 10 a.m. Eastern time. I would stay away from this one. Bank of Canada is expected to remain unchanged on their interest rate announcement. There's a lot of tug of war going on with the Bank of Canada as far as what their tone will be in their statement that accompanies their interest rate announcement. Some people are expecting them to be dovish in their interest rate statement, meaning kind of downgrading their view for the upcoming quarters, or for the near term future especially. And then some people are expecting them that they might even lower interest rates. And then some people are expecting them to be more hawkish because oil prices have been increasing over the short term. So with all that being said, there's just too much uncertainty around that Canadian to make a play on that. They're expected to keep it unchanged. The RBNZ, Reserve Bank of New Zealand, this is another one to where they're expected to remain unchanged. There's a back and forth between dairy prices as far as what they should do in the future. Some people are expecting them to kind of signal that they could cut rates in the future. Some people are saying that they could even be stronger in their statement. So there's a lot of uncertainty around New Zealand. Now, New Zealand is one that we actually had a pretty good trade on Monday. We were able to make 23 pips or 23, 25 pips or something like that. If you traded multiple lots, you probably got more out of that one on Monday. But for right now, I would just say with the Reserve Bank of New Zealand, I would stay away from New Zealand today also. That's at 3 p.m. I believe it's at 3 p.m. Is it 3 p.m. or 2 p.m.? Let's go in. Let's go check the news. I thought it was 3 p.m. Yeah, 3 p.m. Eastern time, New Zealand interest rate decision. So yeah, that's at 3 p.m. today. And then ECB on Thursday, we're going to trade this live. If you would like an invite, shoot me an email at education@nurifx.com. We're going to start at 8:15 a.m. Eastern time, roughly 15 minutes before Draghi's announcement. One of the reasons why I'm trying to get in ahead of the ECB and trying to hold a position on through the ECB and hopefully get to a point where I have a break-even trade on is the actual interest rate announcement is at 7:45 a.m. Eastern time. There's kind of a two-part story to this ECB announcement, and this is what I'll kind of talk about here for a couple minutes here. The expectations is that Super Mario is going to lower their deposit rate by 10 basis points to, it would be negative 0.4, I believe, would be to further negative deposit rates. They're also expecting them to extend an extension of their asset purchases by up to 10 to 20 billion. If they go up, they could go upwards of, I think it's at 55 billion right now. They could raise it up to almost like, I believe it would be like 80 billion in asset purchases monthly for their QE. This would be announced at 8:30. The deposit rate would be announced at like 7:45. But I think people are going to hold off on moving the euro. The euro generally does not move at 7:45. It can move a little bit. Generally, most of the movement is done at 8:30 Eastern time when Mario comes out with his statement. This is a big deal because, and I want to kind of explain some things to you folks, those of you not familiar with fundamentals, and why it's such a big deal in the Forex markets. So give me a second here to just kind of explain myself or explain the overall situation. I think you'll get it. So let me just go here to a daily chart and kind of zoom out here. Actually, I can zoom in because we're just really looking right in through here. Right in here, this was a big single day move, one of the bigger single day moves we've seen in the euro. This was back in December when during their previous interest rate announcement, which was back on, I believe it was December 4th or December 3rd. They were expecting an extension of their QE program back in here. All right. Now, all they did is extended time-wise, and they didn't really take enough aggressive action, and it disappointed the market. So last time they had a meeting, Super Mario did not deliver on making the euro weaker, which is exactly what he wants. Make no mistake about it. Now, because they only extended it with time, obviously it brought the euro stronger, and that's where we've kind of been, since then. We've actually had a stronger euro. One of the things you need to think about when you look at the euro, if you're a more fundamental trader, is that Super Mario did not want the euro doing this. It did not want to go up because one of the problems in the eurozone is deflation. Now, deflation is when is not prices going up, but prices going down. Now, when Super Mario tomorrow is going to try not to make this mistake again. Because if he does not deliver to the market a more aggressive easing package as far as QE and negative deposit rates, he runs the risk of the euro going higher. The euro going higher actually contributes to further deflation in the eurozone, and they have had some more deflationary pressure as of late. The fact that the euro has gone up and is up, near those 110 levels makes it all the more important that he deliver on what the market expects, that he's aggressive enough in his verbiage and aggressive enough with their QE and their negative deposit rates to bring this euro down. Now, the reason why it's important that the euro goes down is because that would actually help bring prices, stabilize their prices in the eurozone. Because when the euro goes up, when there's a stronger exchange rate, the reason why they have deflationary pressure is because the majority of the economies in the Eurozone are export dependent. And if you're an export dependent economy, um, they are they are having to lower prices on their exports to fit their exchange rate. It has nothing to do with them, the deflationary pressure. If you're exporting, let's say, candy bars from France, we've used this one before, and your exchange rate is at 110 or 115, and there's nobody importing those candy bars from you, you're lowering your prices to try to fit the market. So you're producing goods and you're lowering the prices on those goods to export. And the reason why you're lowering those prices isn't because of the economy. It's because the exchange rate is higher. The exchange rate is contributing to a lot of the deflationary pressure in the Eurozone. So that is why I believe it was 2 years ago when Super Mario finally acknowledged the fact that the euro was a big concern as far as their deflationary pressure. And this is one of those reasons why when you look at the expectations for tomorrow on the ECB meeting, that we have a central banker that wants this to go down. And somebody have a question here? I saw Gary's hand was raised. I wanted to see if there was a question on that. So all this comes up with kind of knowing the central bankers a little bit and knowing their themes of what they do. A lot of this happened 2 years ago with the euro, and 2 years ago with the ECB, with Super Mario, and the fact that he was trying to be more aggressive in what he was doing and what he was throwing out to the market, and the euro back then was also going up. That if you go back to the beginning of the longer term trend on the euro, you'd have to go back right back in here. This is where this was happening back during this April of 2014. So this was back when the euro was up at the 140 level. Super Mario was trying to be aggressive. He went through a time where he would say, the euro is not part of our monetary policy. It has no effect on our monetary decisions. To then acknowledging the euro was part of their deflationary pressure in the eurozone, the rising exchange rate. And then he finally just had to be more and more aggressive until finally he cut. That fundamentals right there is what caused this large downtrend in the euro during that time. You had a central banker pretty much change his entire verbiage surrounding their underlying currency to basically force their currency down. And that's exactly the situation we're in for tomorrow, is that even though people are expecting this to happen, he's not going to want that same December scenario to occur again. He knows if he's not aggressive enough in his speech, he knows if he's not aggressive enough in their QE, that the market could say, you know what, this guy's just not doing it. This guy's not fitting our expectations at all. So, we should, the market may sell off, and it may cause the market to, and if it does sell off, the euro, because their negative low interest rates and negative deposit rates, has become more of a funding currency like the yen, towards a lot of times when the market does sell off, the euro gets stronger because people are borrowing more euros to invest in the higher yielding assets. So again, we'll be trading this live tomorrow, but there's a lot of scenarios here, and most of them point to a higher probability of the euro going lower. Now, there are risks associated with this. Let me check the pound real quick. I want to make sure, because this is another trade that we're looking at today. What are the risks involved here? Well, one of the risks involved with this particular trade, and here, let me go to a 4-hour chart, is exactly what happened with the yen. The yen, when the Bank of Japan announced their aggressive monetary easing program as far as their asset purchases and whatnot, right back in here, it did make the yen go down. The yen weakened by about 300 pips. And over in here, this is where we actually had some really good CAD yen trades and dollar yen trades here at the end of January. Was people were saying, well, buy the yen, buy dollar yen. You know, the yen's going to get weaker. We expect it to go up because of this aggressive monetary easing. But then what happened was the market started to tank. The stock market started to tank. And the yen, with that risk-off approach to the market, even though they went into more aggressive monetary easing, the yen still got stronger. Why? Because, you know, again, no matter how aggressive their monetary easing was, the market still collapsed, stock market still went down, and it still caused the yen to get stronger because of that more of a that borrowing situation with the yen. You can see what it's been doing since then. It's been more sideways, which is pretty much what the market's been doing since then also. So there is risk associated with it. It's not a guarantee. There's no risk-free trades. You probably all realize that by now. I'd be happy if there was, but there is risk associated with it. You know, no matter how aggressive he is, there could be a chance he could disappoint the market, and the euro could, the markets could sell off, and the euro could get stronger, even still, if he does not meet or exceed market expectations on being more aggressive in their QE program. So this is one of the reasons why I'm keeping that short position on the euro. I think that he's going to try not to make that same mistake that he made in December. I think that he will be more aggressive, learning his lesson from that, from not being aggressive enough, and that the market's going to see their expectations be met, and we're going to see a further decline in the euro. All right. Now on to some other trades here for today, just as far as more technical trades go. This was a bit of a disappointment yesterday. Right in here was on the pound dollar. Pound dollar was, it was pretty heavy disappointment yesterday on the pound, because we had shorted it yesterday when it came back down below 4,200. I had I was doing a little work, and I thought we were in good shape because it kept on going down. Our stop was really tight to this one, and it came up and stopped us out, and you can see it's kind of been sideways since then. But if you look at longer term, you know, everything's kind of pointing down. Everything is still showing more selling pressure here on the pound, you see. And so I still like shorting this pound right through in here, because what you can see right in through here is that we have a head and shoulders top that's now formed. You know, it's already starting to break down. Just because something stops me out, it doesn't mean that you give up on a pair. It just means that you're a little bit more cautious when it comes to your confirmations. But we have a head and shoulders top right up in through here. And if you look at the kind of the neckline that flows right through here, it's damn near a trend line too, but we'll just go by the troughs in between each shoulder. So we have a nice little neckline flowing in through there. So I'm willing to give the pound another shot of shorting this also today. This is a reversal pattern, and you also have an ascending neckline. I don't know if you know that much about pattern trading, but when you have a head and shoulders top, a lot of technical traders would consider an ascending neckline. If it's a neutral neckline, that means it goes straight across. It's more of like a horizontal support area. An upward trending neckline or an upward sloping neckline, oftentimes people consider that to be a higher probability scenario for a market reversal. Plus, we do have, throughout this entire time right in through here, we have the LP, the liquidity providers, are really selling this one off. I mean, they really are favoring the sell side. I think yesterday we just had our stop maybe just too tight to the market, or else we'd probably still be in this one. And it has crossed down below 4,200. Actually, I probably shouldn't zoom out. So what I'm going to be waiting for here is I'm looking for a break of neckline for a sell entry. I want it to break through this neckline. I don't want to make the same mistake we made yesterday. I think if we do get some more selling pressure on here, it's already gone -5 several times right in through here. So I think if we do get a lot of selling pressure, that we could certainly break that neckline. We can break the neck. We can break the neck. Stop. .42428, or you can just do like a 50 pip max, just putting it right above the right shoulder. And I think in this case, you know, I'm already looking for a higher risk reward ratio trade here. For this one, I think it's possible that I mean, if it does make even yesterday, I was thinking we could quite frankly see a larger drop in the pound if it were to start selling off. They had some good manufacturing numbers overnight, but you know, it hasn't really changed the you know, it's still, the pound still didn't go up. I still think that the pound, the underlying pressure on the pound is still essentially fundamentally, people are still a little weary of buying into pound strength because of the fact that, you know, we are going through this 3 months or so of the potential for a Brexit. So, but I like the look of that because it does line up, and this has been kind of doing this little divergence right in through here for a while. I'm going to put it in as a limit of 1-to-1 risk reward. For you, if you want to be a little bit more aggressive, I think I'm only putting a limit of 1-to-1 risk reward in because I already have a trade on short euro. One to 1.5 is also acceptable. I mean, if you know, for those of you that are in that euro trade, you might want to just look for a 1-to-1 risk reward. For those of you who are not, you could look for, you know, I think 1 to 1.5 is certainly doable if we do get a clean break through that neckline, especially with all the selling pressure that it showed right in through there. So let me go ahead and copy that down. Whoops. What happened to my screen? There we go. Let's see, you're right at 9:30, so stocks are looking to rebound. We had a bit of a down day yesterday. So stocks are just now opening. They're up about 64 points there on the Dow. So that's a positive sign if you are wanting to be long the dollar. Commodity currencies for trading dollar weakness, that helped us out a little bit on Monday, but because 2 out of 3 of the commodity currencies are announcing interest rates, I don't think we need to really look at commodity currencies as far as I don't think we need to look, you know, too closely at those commodity currencies as far as being opportunities for dollar weakness today. I still think we can trade either dollar strength or dollar weakness because I think that's going to be the primary driver, but we probably want to stick with some more of the major pairs on that. So I'll shift gears here, but that's, you know, that's a nice little dollar strength trade. The euro dollar, the question becomes, if we didn't enter the trade yesterday, is there still potential on that? Absolutely. It's still breaking down. If you wanted to, here's the previous low right down in here. And, here's the next low that would have to be breached, which is right here about the, let's see here, the low, like the 109.40 level. You could absolutely still put your, at this point, if it breaks down through this low, you could look for this as a trigger to sell it. It's starting to break down again. It was +5, it's going negative. So, if it starts breaking down below this low, you can either enter it in now. If you entered in now, you would probably, you see where this trend line was, where we entered right below the 110 level. If you were to enter it in now, you can still do the same strategy. You can put your stop possibly right above this swing high. So you'd have about the same amount of pips as me as far as your risk goes. So, I'm already in it, but I don't think it's too late. I do think the euro, as we get closer and closer to the ECB announcement, because it has been stronger over the short term, I think there is potential for it to continue down. It's shown signs right in through here. You have to look kind of close here, but it showed signs of breaking down here on the LP trend line. It's going further negative as far as the buy and sell imbalances go. But you want to be a little bit cautious on this. You want to make sure that your stop's at least above the 110 level. I like where my stop is right now, and like I said, I'm going to wait until I hit this would have to reach 640 on this, 64 pips, and then I'll be moving my stop to break even. So, you kind of have to do your diligence on that. We put this in as a scenario from yesterday. So if you're not in this yet, this is a trade that I do plan on trying to keep open until tomorrow. So short answer to your question is, yeah. If you wanted to sell it now, put your stop above this swing high, 1.10105. So it would be about, just like me, it would be about 64 pips away. You could absolutely do that. And then I didn't put a limit or a take profit in on this yet. Tomorrow morning, when we meet for the ECB meeting, I may have a more of a take profit in mind. I want to kind of see how this pair goes throughout the day. I think that, we have potential for at least, a 1 to 2, possibly 1 to 3. Who knows? We could probably get even higher as far as risk reward goes. The reason why I say that is just look at the daily chart where all this started was down at the 105 level. Previous support right down in here was right at about the 107 level. This is about the 108 level would be what I'd be looking at as far as just a kind of a minimum movement on this. And then this is right at about 109 right in through here. But I think all these support levels could, we could go back to these previous lows. I'm not saying we're going to do it tomorrow, but the potential is there for higher risk reward on these trades. I would say, you would look for at least a minimum of 1 to 2. I think it can at least, at the very least, I think this can go back down and retest the 108 level from where it's at right now, which would give us about a 1 to 2. From the current price, it would give you about a 1 to 2 risk reward ratio. Other ones that we can keep an eye on here today, between the pound and the yen, obviously we're looking at some up market, or we're looking at some more bullish or market recovery, a little bit of a market rally, if you will, here today. So, looking at dollar yen, this is another one. I was kind of looking at the pound more for a dollar strength trade, but the dollar yen was hanging really tight down near these lows right down in here. And then it got down to almost 112, and it's broken out above these highs. So, dollar yen is also looking pretty strong. You see the fact that this has been coming down and now it's kind of reversing course here to the upside. Dollar yen has some pretty strong potential for going up today too. I mean, we are looking at kind of an overall dollar strength day here. For you yen traders out there, I mean, this was, it's broken up through the trend line, but the reason why I didn't choose this one as kind of more of a higher probability scenario for the class today is the fact that it's really dangerously close to the that 113 level. I think you could actually look at that 113 level as being kind of the next breach, if you will, that, if it kind of comes up above that 113 or bounces off of it, that could be your next point of resistance. So if it breaks up above 113, you could look at that for buy scenarios, or you could look for a bounce off the 113 level for potential dollar weak scenarios, although I'm not a huge fan of that. Actually go from this swing high right up in here. Like from this swing high, which is right up above 113, I think if the market were to start selling off at all today, which is possible. I mean, that ECB meeting is just not something that U.S. Or European traders are looking at. That's something that had a pretty big effect on the overall markets, the global markets back in December. So when looking at the dollar yen, it's not a slam dunk that the markets are going to go straight up today. So if, one other potential scenario, you could look at this 113 level as either a breakout. I look for the pound more for the dollar strength side of this, but you can also look at this for a potential dollar weakness trade at this 78.6 level. It's not quite there yet, but at this 112.94 level, which is right below 113, you could potentially look for a sell trade. Again, I would look at the pound dollar as more of your dollar strength scenario. But if you are looking to trade in either direction today, now, one of the scenarios we went through on Monday is if it touches this 78.6 level, I would look for a lot of confirmation here because we are looking at some more bullish market conditions. But if it touches this 78.6 level, it's already gone +5 and it hasn't gone negative yet. It's been hanging up here in the positive levels on the PitView indicator. You see the LP trend line going up. So I would use a little bit more confirmation on here. But what we said on Friday was, if it touches 78.6 and then if it, since it has been going +5 here, it's already gone +5. If this goes negative, that could be a little bit more aggressive confirmation for you. We didn't quite get any of that on Monday, but that's something to consider if you're a PitView trader, is looking at those 1 hour totals. And once it goes +5, you don't have to necessarily wait for it to go -5. You can look for it to just cross. One thing I've been seeing is that if it crosses into negative territory, that can be good enough for confirmation. Now, as far as touch and close scenarios, I wouldn't use this. We do have other forms of confirmation that could be more conservative. I wouldn't look for just one bar to make a touch and close on this. It's already touching the 78.6 right in through here. I would actually look for at least 2 bars to touch and close off the 78.6 level for more confirmation for shorting the yen. So that would be for Nuri students. That would be a multiple bar touch and close. So not only one making a touch and closing off the 78.6, but looking for a second candle to close off that 78.6 level before entering. Because we may have potential. You'd want to see a pretty sharp stall in the market there. For right now, a good midline for this would be, it's touch 78.6 and looking for, a more conservative form of confirmation would be to look for a -5 on those 1 hour totals. I'm kind of all over the map here a little bit, but sorry about that. Put your stop right up above the 100% level. If you can get in on a good retracement, and if it does start selling off, you can actually look for a limit 1, limit 2 scenario, because there's a good chance that your risk may not be a whole hell of a lot on this. And look for a limit 2 at 1 to 1.5 risk reward. So if you're risking, let's say 30 pips, maybe you'll look for like a 50-point gain. But that would be a good solid dollar weakness scenario for today, since it is in the midst of a retracement. The market does sell off. Dollar yen does have plenty of room to go to the downside. And the yen, believe it or not, has been one of the stronger currencies over the last week or so. You look at all this yen strength right down in here. There's no rhyme or reason to it either. It's kind of been a crazy market this week. There's nothing that's really driving markets this week. Whoops, let me take this down here real quick. Put up the PitView. There we go. And when I say nothing driving the market, I'm talking about, from a risk on, risk off standpoint, there's not a whole lot of risk on, risk off correlations, meaning these things are kind of going all in different directions this week. Market was up 5 days in a row, but the yen was strong. And I know the Asian markets have actually been down, which is probably contributing to the yen strength. There's been a bit of craziness here. Even when our markets have recovered over here in the U.S., the yen still has not made any good momentum to the upside, even during the U.S. session. It's actually pretty interesting. We're pretty much looking at more technical scenarios. I was wondering, I was like, why isn't the chart moving? No, that was the copy. All right, what's happening with pound anyway? Yeah, pound's just sitting there. Hasn't really broken through yet. It's still weak, but it's not terribly weak there. What was our high here? Just oscillating, or not oscillating, just sitting there near the low. Look at this chart on the euro dollar real quick. Seems to want to go lower. Let's see, we're at 946. We're starting to move a little bit there. We got about 13 more minutes till 10 o'clock. So I would keep a close eye on this one. If it closes beneath that neckline, and you can wait for it to go negative up in here, because it's almost to a +5 here as it's reached this support level. We'll have to just wait and see. You'll have to kind of watch it here. Hasn't quite gone +5 yet, but if it breaks the neckline and if it just goes, or if it closes below the neckline, you may want to wait for it to go at least to negative territory on there before getting in. I mean, it's almost at a +5 right now, which is signaling that could be some buying pressure coming into it. Interesting. Interesting day. Yeah, you can see it's coming up. I would say that's, it's like 4 point, it got up to like 4 point, tick to 4.91 at one point. If this just goes negative, from here, and as long as it's below that neckline, I would say that would be good enough confirmation for me anyway to go short on this if it just goes negative. I mean, it touched like 4.91. I mean, doesn't get, from a discretionary standpoint, doesn't get much closer to +5 from there. But you'd still want to wait for it to break this neckline right in through here. And if you're looking for added confirmation on this to be a little bit more conservative, you can wait for a close below the neckline. If this bar were to close in 10 minutes where it's at, that forms almost a perfect trend line right in through there also, which not only would you have an upward sloping neckline, but you'd also have a validated trend line. So that could be a pretty good scenario there. But I'm not going to get that much more aggressive since I'm already pound, on the euro dollar, since I'm already short. I'm not looking to be too overly aggressive today, but I do like that formation that the pound is made up in there. I do like that formation, and the dollar yen, that one could be a good shorting opportunity, but you'd certainly want to wait for the market to turn in your favor on that. So use like I said, NuriFX multiple bar touch and close off that 78.6. Wait for it to go negative on the, if it does close below the 78.6, wait for this 1 hour total to at least go negative before shorting it. Same thing on the pound. When it breaks through that neckline, you can wait for a close below the neckline, or you can wait for and wait for those 1 hour totals if they do go negative for confirmation on that. We're staying away from commodity currencies today just because at 10 o'clock we have the Bank of Canada interest rate announcement, and I would rather not be on the wrong side of that one. And then we have our open position on euro dollar, which is pretty much just going to be a continuous trailing stop. It would have to move like 100 points again to stop me out at this point, and I'm more than happy to keep that short open. So that's all I got here, folks. I've got to actually run literally to make it to another class at 10:30. Remember to email me if I know Jindrik. I know shoot me an email at that education@NuriFX if you want to be a part of the live trading room tomorrow for the ECB announcement. Go ahead and get these saved. Give you the handouts for today. And as we always say, let's put some lipstick on this pig. Let's see what we can do. And most of you, I'll catch you tomorrow morning. But these should be some pretty good scenarios for you here today. And I'll go ahead and, somebody asked for my email again. Here's the email address to use right here, educationareafx.com. That's where we'll be holding that information session tomorrow. And I will chat at everybody later. Keep it simple today. Don't try to overthink the market. Don't try to, don't try to overthink things. Just let the market come to you. And I will chat at all of you later. Thanks for coming in. Bye-bye.